Good morning, everyone. What's going on? So, I stated last night that I'm going to be live streaming publicly for the first time, and I don't know how long it's been, but this will be the last time I do so. And obviously, all my streams are exclusive to my Discord, but I decided to come out publicly today, and I did make that tweet prior to this large overnight move. Okay, we had a huge drop last night. There's also news coming out that, you know, bombs dropping and whatnot. But watch this 1 minute for value gap right here. I'd like to see this take us down below these lows right here internally. I'll shade that tan there. Let's flip over to ES. So if you compare and contrast all the averages right now, okay, so we go to 9:30 opening. We see that Dow is traded higher above the opening. We go to NASDAQ. We see that we've traded off. And then we go to ES, and we see that ES hasn't done anything. It's just been kind of ranging. So my members and I know that anytime we see that, we always wait and sit on our hands. So whenever you have a mixed bag, you can call it, whenever all three averages are telling you different things, that's whenever you would just want to wait and, just kind of let the opening range set itself, all right? So initially, this 1 minute fair value gap, I know a lot of guys are like, all right, time to short that. Okay, we have a market structure shift after the 9:30 intermittent term high. No. If you're not looking at every, all the averages and bonds, dollar, I mean, you're kind of just, turning away and giving yourself a blind eye for no reason. Okay. It's like you're literally just sticking your face right in front of a tree and not allowing yourself to see the rest of the rainforest. Good morning, Sway. So, like I said, I made the tweet that I'm going to be live streaming publicly for the final time today, which was, the plan. But if I'm not able to outline any good setups for you guys today publicly here, I'll boot up another public stream next week, and then that'll be the final time I do that. And, back to business as usual in the inner circle. But, like I said, prior to the tweet, I think we were like somewhere in this consolidation here. Then almost 30 minutes after I tweeted that, boom, huge move to the downside. Where did it go to? What's this red line here? Well, let's go to the daily time frame. Okay, see these relative equal lows. See, overnight we came down, ran the sell stops here, and we come up and create this very large wick. So no matter if it's today, next week, Monday, Tuesday, Wednesday, Thursday, this wick is going to get worked in if it stays like this. Okay, this is very inefficient. So the same thing as we view a fair value gap here is how we view the wick. Okay, so we're going to look at 25%, 50%, 75%. So looking at all the quadrants of it and looking for those to be worked in. And ideally, we just like to see the midpoint to be able to frame narratives off of wicks, right? NASDAQ. Okay, same thing, ran below relative equal lows. If you take our yearly range, okay, so here's our yearly opening. Below the opening, we created this low here. So that's why we're anchoring our fib from this low to the high that we made. Where did we trade below? This is equilibrium. Blue shaded area is premium. Red shaded area is discount. So we've now traded below into a discount, into sell side liquidity. And if we go up to that weekly time frame, if you look real close here, these two down close candles here is one weekly order block. So you take that opening, extend that out. You see that we repriced to that. So what do we do from here? Well, we study price going into next week and see, like, go off of what it tells us. Does it want to retrace or does it want to continue lower? Okay, so whenever we reach very key discount daily time frame arrays, such as what I just showed you, you kind of let the market set itself, and you study it and allow it to tip its hand to you. Okay, we're not sitting in here trying to arm wrestle the market and beat the market. No. Okay, all we're doing is allowing them to tip their hand to us, and they leave behind these little breadcrumbs, these footprints. And if you know what you're doing, you're able to identify them, and from there we execute and make our money, right? Simple as that. So anyway, pretty much same thing as I said. So Dow went higher at the opening. Notice like the just gradual sideways climb up, right? And then NASDAQ, okay, traded lower. It would have been preferred to see it knock out these lows quick, but it traded lower, boom, into the fair value gap below this short-term low here. And now we're displacing above these down close candles, which would be initially a change in the state of delivery, right? And then ES not even giving the short-term low any time of day, just going straight higher. Okay, so this right here is going to be our buy side liquidity. So we'll watch that. So if you take a look here, ran above this short-term high right here. It doesn't really have to get above this high, but it would be nice to see it spike up there and then see if we can't frame a short into the internal lows here. Now, I'm saying that, talking about framing a short, but that doesn't mean I'm going to force something, okay? It would be nice to outline something for you guys since I'm public, but, with the large overnight drop, get this gradual sideways run up, I kind of got to stay on my toes, especially since we're so early in the day. Likely going to be trading, if at all, 10 to 11 a.m., right? But so far, I like what we're seeing here, okay? So, 9:30 opening, trades above it. To do what? Sweep the short-term buy-side liquidity here, and then we'll see what it wants to do from there, okay? So right away, your eyes are going to jump to, number one, these clean lows here. Number two, this consolidation sell-side liquidity pool here. And I mean, anytime you see like a gradual sideways run up like this, it typically always gets upset to the downside, and it isn't really usually a sustained run, at least in the long term, right? Now, one more thing I should probably point out is, okay, if you take a look here, we have a high, low, higher high, and then this down close candle here would be our breaker. So you want to extend this out and put that on your chart because it's a key premium array that we're repricing to right now. Okay, so there we go. And why is it important that we're even trading this in the first place? There's a lot of guys that are live streaming or whatever, like, all right, yep, here's this breaker, guys. All right, cool. All right, but they don't even know why it's trading there. Why, like, what's the purpose? So see how it utilized it right here? So came up into the breaker, into the body, came off. So those that were longing here, this is why it's important. Pay attention. So those that were longing, trying to long like on a continuation play here, whatever. As soon as they realize they're offside. Boom. If they're not already stopped out below swing low, maybe they're holding on for more. This is more so for larger funds. Okay, those with deep pockets. As soon as we trade below this low here, that becomes a breaker. And whenever we reprice back up to it, this retracement here is allowing those that are on the wrong side of the marketplace to mitigate their loss, and they can get out right here to cut losses. Okay, so that's the business on that. So another key thing that you really want to note here: where's the midnight opening? Right here. Where's the 9:30 opening? Right here. Did we trade above that? Yes, we did. Are we above the midnight opening? Yes, way above it. So without an indicator, that tells us that we're overbought. Okay, and we're obviously not framing setups for overbought and oversold sake, but it's another thing that you just want to add as a confluence, right? So notice the SMT divergence as well here. Okay, Nasdaq failing to make that higher high right here. Okay, and remember I said sell side liquidity resides right here. So nice displacement like here. So those that were impatient and don't have a great understanding of time with narrative probably were shorting this, and they're regretting it up here, and they're like, oh man, I should just waited, and here's this nice displacement now. Experience will shy you away from that, I promise. Alright, so the nearest turn draw for ES here, I'm going to be watching this inefficiency. So you're seeing me mark these out, and you're seeing me mark out liquidity pools and inefficiencies, and there's nothing else to tell you what price we'll be drawing to, right? Because there's only one of two things that these markets do, and that's trade to inefficiencies or trade to buy side or sell side, right? Alright, so we just traded below that swing low there. Remember the SMT divergence here, so Nasdaq's failing to make that higher high there. Okay, we're already in a deep premium. Okay, so this is our dealing range here. See that we're up into a premium. Beautiful, isn't it? Alright, so watch this 1 minute fair value gap. Okay, so we're now in that macro time, so it's 9:50 to 10:10. Okay. Nasdaq's slipping a little bit. So here, I'm going to shade it out for you guys. So we worked in that regular trading hour gap. Once you traded one more time higher. Okay, so notice how it closed above this 1 minute fair value gap. So those that, they just really want to get a setup today and they're coming in, maybe they have some mental baggage from the remainder of the week. They didn't do so well if they're impatient. They're sitting here trying to force themselves to see an entry, but really they need to be hanging out on the higher time frames and understanding the underlying narrative that we're within, and that today may require a little bit more patience if it yields us a real setup at all. Okay? And why am I saying that? Well, I mean, you guys saw the news about bombs dropping overnight. Okay? After market close, we had this huge move down. Okay? And then ran up a little bit. Overnight, we had a relatively large move. So once we enter that 9:30 opening range, and our opening range is simply just 9:30 to 10 a.m., it's likely to consolidate, and that's what we've seen so far. So although we have a run on buy stops here, coupled with the SMT divergence, I'm understanding with the narrative that it's, likely not to deliver in the way we'd intend within that 9:30 to 10 a.m. Opening range. Okay. So like I said, that tweet that I made and the plans for me to live stream publicly here was prior to seeing this large move down and the bombing news. Okay, so if I'm a generous guy. Um, if I'm not able to frame something for you guys today successfully, next week I'll go ahead and boot up a public stream and I'll end it that. Boom. Last time you ever see me here live on YouTube. Okay. So anyone that just decided to stumble upon my public stream here, they got saved from two low quality setups that are disguised as a high probability setup, and that is number one, selling short here. Number two, selling short right here. Okay, so patience, relax. Guess what? What happens if we don't take a trade today? You preserved your equity in a time where the price isn't delivering as cleanly as you would want it to, and if you're doing anything outside of that and you're going outside of your model just to trading for trading's sake, I mean you're not trading, it's just gambling, right? So there's only two things you can really do within these markets in terms of executing, and that is execute with the edge, with a model that works, or you gamble. Okay, so you choose what you want to do. Gambling is typically a very low sustainable fuel in this industry. Okay, I promise you that. I mean, there is guys that get lucky, but even after that luck, they usually blow out. So I would advise you to have a plan, have a written plan of what you actually want out of the marketplace in terms of percentage goals per week, per month, per year. And as soon as you hit those goals per week, make them realistic. You stop. You don't trade anymore. Okay? Okay, so larger retracement up into this wick here. So I'm not going to measure it out, but you can clearly see that we worked in the 25% of this premium wick. Okay, so we'll watch it from here. Now, as I'm saying everything about shorting, I always said I prefer framing a short because there's simply zero edge in me whatsoever trying to frame a long in this deep premium that we've already climbed up into. Okay, I promise you that. The highest probable longs come from where? Discount. Highest probability shorts come from where? Premium. Okay, and that's not something that's secret. I mean, that's pretty obvious and, self-explanatory, but some people they just don't it's bullish, okay, whatever, but they don't allow it to get to that discount. They're just forcing it and longing way too early when simply they need to wait for that retracement. I mean, understanding trading and the concepts, it's really not the hard part. I mean, you see so many guys out here, hindsight junkies and people are trying explaining the concepts but have no profitability to show for it, right? And that's just because the concepts is the easy part. Lots of people know them by now. And not to say there's only one concept out there. Obviously, I trade ICT concepts, but I know an extensive list of guys that are very profitable with, complete different strategies than mine. So it's not that I'm possessing a holy grail and I got some secret enigma here for you guys. No. What makes it work and what makes the profitability come our way in our group is the psychology, the risk management, the discipline. Okay, the list goes on. It's not the concepts. Okay, I promise you, the concepts is the easy part. That's your base. Okay, once you learn the concepts, you have yourself a base. And then everything after that is the hard part that, makes or breaks your profitability. Okay? Mighty, yeah. I think you were an old viewer of my public live streams back in the day. But yeah, no problem. I'm glad to help, brother. Hey, what's up, Jake? Appreciate you. Hey, I made a decision. It was some good days, but I made a decision that, I don't really just want anyone within my group and whatnot. So, slapped a small fee up on it. But in exchange, you get the keys to a literal ATM machine. I'm not just talking about the concepts, okay? But, I mean, honestly, it's just if I'm doing it for free and out here publicly, it's just, I feel like majority of the viewers aren't really taking it serious and I'm just wasting my time at that point. So I feel like those that are willing to pay a small subscription would be, more so willing to take it serious long term at least. So that's just my mindset on that. So for any new viewers that may have just joined, I will remind you, this is the final time you will ever see me publicly stream. I said that prior to this very large drop down. Okay, we got lots of stuff going on around the world. It's not looking very promising. Okay. I mean, I'm not sure how credible it is, but obviously there's news releases about Israel retaliating on Iran and whatnot. So we had that take place overnight, and as a result, we had this large dump down. Okay, and honestly, I don't actually think that this drop down happened because of the bombing. Because I mean, this was already the main draw in liquidity on the daily time frame. So remember, I took our fib here. Why am I using this low? Why am I not using this one? This one, list goes on. Why am I using this one? Okay, here's our yearly opening. Here's the low that we made on the year. So we're taking our yearly low to the high. Here's our dealing range, our 2024 dealing range, okay? Here's the equilibrium. What do? We dropped below equilibrium and tagged that first level of discount sell side liquidity. Okay? So this liquidity pool holds more importance to me because it's hovering around equilibrium. Okay? Put that in your notes. And as I've been endorsing to my group this entire year now, this entire run up, gradual run up, this is all, it's fake. Okay? This is all just the Fed pumping money in this. I wholeheartedly believe that. There's nothing in this world suggesting why we should have traded this high and continuously broken a new all-time highs, okay? Completely manufactured here. And then you see this very large trend line sensation going on here, okay? Non-greedy trend line traders, they could have made money on this, right? Eventually, I knew that this was going to be offset. And when did that take place? It just so happened to take place in spring, which is our first seasonal tendency to draw lower, right? And it delivered beautifully. Okay, so there's our opening range set in place. So we have 9:30 to 10 a.m. Obviously, all we did was consolidate. Now, what are these two red lines right here? This is previous day's new day opening gap. Why do I still have that extended forward? Because there's fair value being yielded up here. So we have if we have to drive higher one more time, I would like to see number one, this high taken, and some type of respect of this new day opening gap. Okay, so for larger funds, there'd be fair value yielded up here. So just keep in mind here, 9:30 opening. Okay, right here. Are we above that? Yes, we are. Ran above the internal buy stops, the buy side liquidity here. Okay, we created this swing high here, traded off, and now we're just consolidating. So it's a matter of displacement at this point. So let's say we were to open on this candle here and displace below this swing low here. Excuse me. And displace below this swing low right here. At that point, I'd start looking for an order block or a fair value gap to execute on, and I'd be aiming for number one, midpoint of this 15-minute imbalance that I mentioned. This small fair value gap here. In this consolidation liquidity pool residing right here. So our intraday dealing range that you want to take is, okay, same thing that I showed you with the yearly dealing range. Okay, where's midnight opening? Right here. What did we do? Traded below midnight, created the low. Okay, so this is the low that we used to the high. This is our daily dealing range. Where's equilibrium? Right here. What's below equilibrium? The sell side liquidity residing right here. So I keep dropping down to the 1 minute time frame, but really no need for me to do so as of right now. Now remember, we still have this SMT divergence held intact here. Okay, ran up, failure swing, and then obviously ES. We all see that we were able to run above. Okay, but as of right now, there's nothing to execute on. Okay, I promise you, don't drop down to the 1 minute time frame looking for an entry just yet. Okay, all we've done is consolidated. Obviously, I'm preferring lower pricing down below here. But just because I'm preferring that doesn't mean I'm going to sit here and force that. Okay, so I allow the market to tip its hand to me. I'm not going to arm wrestle it and demand that it leaves a consolidation, right? Hey, Mike, good to hear from you again. It's been a while. Same with you, Russell. Good morning. Top videos, good morning. So like I said, pretty much everything that I want to see to begin lower pricing below the sell side here took place. Okay, we created this intermittent term high above the 930 opening. Sell or buy side swept. We have SMT divergence. We have internal with an imbalance below. Now that the missing piece is a valid displacement aligning with time. So until I see that, I'm not doing anything, okay? I'm flat. Simple as that. Okay, here's the sell side on ES that I mentioned. Nasdaq's in close proximity to that already. Okay, one thing to note here is, okay, 930 opening, we rolled up into what? With the failure swing, what did we roll up into? This small little 15-minute imbalance. So even with the sell side here being called out ahead of time, there's still, honestly, in my opinion, nothing that I would have traded. Okay, maybe that's different for you, but me personally, no. Okay, so watch this small little volume imbalance here. So with it being 10:13 a.m. right now, I'd really like to see us lose the 4 here on ES, and at that point, trade below the swing low here, I would reasonably be able to frame something down into here. Okay, nice little move off that volume imbalance that I mentioned. Let me put that in lock. So NASDAQ really rolling down there now. Perfect. Okay, so this here would be our inverse for value gap. So we offered sell side of the curve, buy side of the curve. Now we're back down into that. I want to see us run the sell stops. So if we get a nice displacement, well, we already did, but if we kind of close here, roll back up on a 5-minute basis up into a fair value gap or up close candle, at that point I'll be looking to enter short, and then my target will be right down here. Beautiful move out that volume imbalance though, right here. See how it rolled up into it? The second time there, boom, traded off. So notice how even though one of the averages moved in close proximity to where I wanted to see it go, which I'll show you again, sell side here. Okay, we got that first low, but not the entire consolidation, right? It's just, I mean, the movement is predictable here. Okay, this is not a surprise to me in the slightest. Okay, so that's kind of, this consolidation following this large Asia rundown, right? And then a relative large range move overnight on London. Alright, so that lows has been tagged there. Let's check, see what NASDAQ did. Not quite below the consolidation low. I still need to see it pierce below there. Okay. So what did that tell you guys? Where's midnight? It's right here. Okay, we created that low there. This will be our discount sell side liquidity. Almost there. So I wanted to trade down here, and I want to display to you guys. This is a perfect example of how being right doesn't always equate to profitability. Okay, so we anticipated this sell side to be pierced here, and now we're going to steady it from here and look to see what I can do for you guys here. And like I said, with the given circumstances pertaining to, the bombs dropping, large overnight move from Asia and London. You know, if I'm not able to frame something with any degree of high probability at that point, I will go ahead and boot up another public live stream next week, and then that'll be my final one publicly. Okay. Okay, so there's our discount repriced to. Okay, sell side taking on the marketplace, so I can now get rid of that line there, right? Take a look. Okay, so Dow. I'm not gonna really consider Dow with it being this out of sync. Just gonna do more harm than good, so I'm just gonna disregard that. Let's flip over to dollar index. Okay, we're still relative in this range up here, so we're accumulating in a premium. Okay, so me and my group have been watching these higher levels for quite some time now. Eventually, we want to see us reprice up to here. We're likely to see some type of nice retracement first, though. So yeah, I'm not gonna look at dollar today either. Okay, typically I love looking at dollar as like a confluence, inversely, but you know, as for today, I think it's like I always tell my group, if it's not clear, if it's not absolutely clear intraday, then it's just gonna, you know, distract you and not really help you out as much as you would want it to. Okay. Notice the immediate roll up after sleeping the discount sell side. So just compare and contrast ES with Nasdaq. So right now we have our S&T divergence because ES is failing to get down here, while Nasdaq did. Okay. So we did sweep the internal sell side liquidity here. We're down into this fair value gap, where Nasdaq got below the discount. And then once again, I'm not going to really be referring to Dow. So wait a minute. I actually like the move. I like the movement that I'm seeing, even with the two large overnight moves. Okay, but wait a minute. What happens if we don't find a setup today? What if we don't trade? What if, man? What if I can't pass my funded challenge today? Fuck. You preserved capital. That's what you did. Okay. Not every day has to be a trading day. I know. Okay. Dave teaches. I like him. Love Dave. He says every day is a trading day. Every day is a profitable day. I disagree with that. You don't have to trade every single day. All you need is one good setup per week. Okay? So, within my Discord group, where obviously I do everything privately and whatnot, they saw that manifest today. The power of risk management, using risk management to do the heavy lifting, will serve you so well, and I can't stress it enough. Risk management really is king. Okay, so if you were in my group, you saw what took place. Okay, we took 3 losses. We had 3 losses in a row. Not that you see guys on Twitter talking about I'm on this win streak or this how many winning trades I had in a row. That doesn't matter. Okay, we're not. It's not like a basketball NBA standing. Okay, this is trading. But anyway, we took 3 losses intraday. What happens the next day we come in? Those 3 losses amount to what? I'm not over leveraged. I'm not trying to, widen my stop out just because I think it might just go a little bit lower and then go higher, right? It's minus $400 and I'm accepting that. Next day we come in, guess what? We take one entry, one and only, and what happens? We make $800. So essentially, with the power of risk management and using it to your leverage, you're able to do things such as double what you lost in 3 trades, and you're getting that all back and doubling that in profit with 1 winning trade. So it's not about your win rate. I mean, literally, obviously you don't want to have too low of a win rate at that point. You're obviously not going to be profitable. It doesn't matter how good your risk management is. But, I mean, if you literally run down and do the statistics on your own, you can literally have as low as a 30% win rate. And with absolute flawless risk management, you can still manage to be profitable with that low of a win rate. Anything below that, it's not, the probabilities of that kind of lower, but just kind of shift your mindset to away from wins and losses, okay? Because it's all part of the process, and it's just another transaction no matter what the outcome is, okay? So yeah, although we're moving directionally and every level that I called out has been repriced to, it's just, I mean, the overall run, not so favorable in my opinion. In terms of getting in sync with it, at least. Maybe someone else did, based on what I said, but me personally, sidelines is what's preferred here. Alright, so we're about, remember this inverse gap I told you about? If you measure that out, we're about just exactly half of that, okay? And then here's our midnight opening. See how we just touched that? Okay, extend that forward. And yes, we use midnight openings as draws. Hey, Isra, good to see you again as well. Alright, so I'm going to go ahead and take this down close candle here. Extend that forward. So if you like what you saw here and you saw all the levels that I called out deliver, go ahead and run up that like button for me. Not that I'll be doing too much here on YouTube Live, but it'd be appreciated. And one more time, I'm gonna reiterate for those that may have just joined or whatnot. If I'm not able to execute a live trade in front of you guys here today, I'm flexible here, okay? I'll go ahead and do one more live stream publicly next week, okay? So you definitely do not want to miss that. Promise you that. And yeah, it'll be fun. Alright, so there's several things that are taking place right now, okay? See these, let me lock this quick so it doesn't keep getting in the way. See these relative equal lows? Okay, there's sell stops resting below there. Came down, ran those out. We're now trading into this fair value gap here. And then this down close candle here is our bullish order block. Why is this an order block? Why does it matter that we're even trading down into it? In buy programs, when we're bullish, what do we trade down to order blocks for? To accumulate more long positions. It's an ordered block. We're going down there to accumulate orders. Okay? And it's not simply just, oh, okay, we have a down close candle before up move. No. That's TikTok logic, okay? That's not real logic. Alright? If you want to learn bullshit information, go to TikTok. But looking at it here, and I'm realizing that math isn't 100% accurate. Let me fix it. You take a look here. What makes this an order block is, number one, we created this fair value gap right above it, and number two, it ran us up into a premium key level. So if we take our fib, where was this order block placed? Where's equilibrium? Right here. It was placed right around equilibrium. That is not random in the slightest. And following this order block, it propels us up into a premium. Okay? So honestly, I didn't think I was going to be giving out this much information on public. Typically, I leave that to my members, but there you go. So several discount levels have been repriced to. If we take our fib here, okay, low to high of that absolute range, we see that we traded down below equilibrium. So we're down to a discount. Sell side has been taken. We're working in this inverse hourly gap. And then on ES, we have a SMT divergent, okay, which I already explained everything we traded into. We have this inversion gap as well. And then we have buy side liquidity resting above, okay. Alright, I was going to say, I wanted to see us run below here as well. It's a little bit too suspect here, so I like that we wicked below that quickly. Beautiful. Alright, so watch this fair value gap here, and then we go over to ES. And you see this one right here. So, if you're longing, you would want to be long ES because it's going to have the larger, quicker move because it failed to make that lower low. So, the average that fails to make that lower low within the SMT is the one you want to be longing. Okay, it's going to be 98% of the time it's going to be the leader to the upside. Okay, what time is it? It's 10:33 a.m. Okay, so I can only long it if it trades down in here because then I can have a reasonable stop loss. So if I long, let's say 503, 550, I can put it below the low here, or below the down close candle body here, and that would allow me relatively close to a 5-handle stop loss. If I long it here, I'd have to open myself up to a 9-handle stop loss, okay? And I only use 5 to 6 handles of a stop loss, no more than that. Rules are rules. Okay, so I'm not long. I'm not long yet. Might have to come down and make another low there. Okay, so there's no signal here unless you physically. I tell my members this in every single stream. There's no signal unless you see me physically placing the trade, putting a stop loss, and a take profit. Okay, there'll be other guys streaming and whatnot, and they'll be like, "All right, I'm getting long here," and not even show you on the screen. Okay, that's not the deal here. All right, so we just reprice down into. So basically, if we go up a time frame, or not the 5 minute time frame, 15 minute time frame, basically just allowing it to work in this wick here that's left behind. Okay, so those that pay attention to my live, or not my live streams, those that pay attention to my mentorship videos in my Discord, they know how we utilize the wicks to avoid taking low quality setups and like, you know, more so being able to predict when the real move will take place. Okay, because typically it's very rare to see like a relative large wick left behind, such as this, and not see it worked in at all. Okay, so we watched 25% and half of it. Mike, honestly, I don't have a preference of trading NASDAQ or ES. It's just simply the one that offers the best market structure. Okay, and that's it. So yeah, it's too early for me to sit here and say, okay, I'm going long, because you know I can easily get caught on the wrong side of SMT, and then it gets that next just real displacement, and then we go from there. So, yeah, I'm just gonna sit here and watch the tape here. So I don't even have to go watch anyone after this, and I already know there's several live streamers here that have already taken multiple trades and they're regretting it. But whenever you see that type of thing, you see like they just can't stand not taking an entry. They have to take an entry. They have to do something. You know, they're live streaming, so they have to put on a show, right? They just have to put on a trade. If you see that, I mean, they're just new and they don't really actually know what they're doing, right? I mean, which is fine. Everyone starts somewhere. But I mean, whenever you see that, it's just easy to identify that type of thing. Alright, so see how we just made that low there? Let's check on NASDAQ, see if it's, yeah. I would need to see NASDAQ do the same because I would not feel comfortable longing with lows being this clean. Notice that 15-minute order block that I outlined to you guys. Notice it turns into these 3 consecutives. So I'm okay with it running down one more time, making another low there. I'm absolutely fine with that. But at this point, if we start closing below the order block here, right? At that point, it'd be better for me to just start shifting my focus to even lower pricing, right? So let's see here. Alright guys, here's the deal. It's 10:40 a.m. Our next macro is coming up at 10:50 a.m. So with everything I have already given to you guys here, okay, I gave you the sell side here ahead of time. That delivered perfectly. I'm analyzing it here. We're all at discount arrays, and I would prefer a move higher at this point. So we have that macro coming up at 10:50 a.m. So we're gonna stay in here for that. We'll analyze 10:50 to 11:10 a.m. If nothing forms within there, I'm gonna close up on the day and just head into my weekend and be content with the profits that were made with my inner circle Discord already, right? And if that is the case and we take 0 trades here, this will not be my final public live stream, and I will boot up at least one sometime next week, okay? And yeah, Mike Duke, absolutely, I use SMT. I mean, honestly, it's just cringy to see other guys post, without SMT, I can't take a trade, because SMT is, I mean, it's literally just one added confluence to an already predetermined notion that you had in terms of where you want the market to go. It's just one little extra boost within your trade idea. So if you ever see someone on Twitter, maybe you're paying for their membership or whatnot, and you see them saying, I can't take a trade without SMT, run far away, okay? Please. VP, no sir, I have not. It's all here on the stream. Oh yeah, I'm not on Discord anymore, so you guys can go ahead and rewind it back. I guess that's the only thing that YouTube has over Discord in terms of live streaming. Everything else, YouTube is miles ahead, or Discord is miles ahead of YouTube in terms of streaming. Okay, so as Duke and Mike were mentioning though, okay, obviously ES made that lower low there. NASDAQ failed to do that. And so did Dow. Does this mean anything to me just yet? Without displacement, no it does not. Alright, so let me... Oh, wrong way. Okay, this shaded area on a normal day, or whatever it decides to, because there's 3 macros within the New York session kill zone, and typically not all 3 of them perform in a day, okay? Typically it's only 1, maybe 2. But anyway, this here is our macro window. Very specific things take place within this time, small little time window, 10:50 to 11:10 a.m. And I'm not going to get any more in depth than that, because I already have a full mentorship series right in my Discord tab, so just solely dedicated to macros. So technically, on any other day, I'd be like, okay, that's a little bit too clean. I don't really like that, but sometimes it does leave this intact, and this is just in the 1 minute time frame. Okay, where is majority of the liquidity at this point? Up here. It doesn't really care about this small little liquidity pool if it really wants to reach for up here with speed, right? So if you look at the 5 minute time frame, okay, take this wick here. Where's midpoint? Right here. Where are the bodies relative to midpoint? Above it. So that right there is valid in my eyes. And then what happens up off of the wick? Well, there's a down close candle. We just displaced above that. That would now be our change in the state of delivery on a 5 minute time frame. And then boom, we have the SMT divergence as well. So this would be a valid SMT to me at this point with this given displacement that we have. Now, does that mean I'm taking a trade right away? No. I need an entry that makes sense and something that I'm familiar with that I execute on every single day, right? And if that doesn't perform, guess what? No trades are taken, and I'm preserving capital, and we're ending it on a profitable week. Okay, the very absolute last thing you want to do on a Friday is come in on the last day of the trading week and blow out on the last week trying to, pass a evaluation or whatever else you're trying to do. The last thing you want to do is come into a Friday on a profitable week and, you know, blow that out, because then you go into the weekend feeling like shit, and then you go into Monday remembering Friday, and then it just sets the tone for a bad week even after that. Alright, so very valid displacement there. It's just a matter of will it retrace and allow us to enter the marketplace, okay? I already told you guys the draw resides up here, okay? So once again, off the SMT divergence, off the order block. This here would be a change in the state of delivery. Okay, so as soon as we trade above the opening here, it doesn't need to trade above the wick. As soon as it trades above the opening, that's our change in the state of delivery. So with how the 1 minute looks, it's very likely, if at all, I would be taking a 5 minute entry as opposed to a 1 minute. But, obviously we'll wait and see here. And once again, I mentioned this already. If you're trading SMT, you typically always want to trade the one that fails to make that lower low, okay? Because it'll have the stronger move to the upside. So ES failed to trade below this consolidation. Okay, I'd like to see it wick down into the bodies here, the down close candles. Okay, so 2 more minutes till that macro kicks in. And clearly it began early, okay? So setting things in motion even before we enter that macro. But even though I'm seeing like the proper signatures to support an idea on the 5 and 15 minute time frame, which is the time frames that I mostly utilize in terms of lower time frames, still in terms of our entry point, it's just not there, okay? So, any longs here, if it were to offer me that retracement, stop loss would go right below this candle here. Why is that? This here is a breakaway gap. If this is traded to, we're bearish, okay? It's not going to trade higher up off of this, very likely. If we trade down into here, this is indicating weakness and we're likely to go into new lows, okay? So this would be a breakaway gap, and you put your stop right below here. So it's just a little bit tricky here. Like the algorithm, it's here and alive. We can we can see the signatures taking place here, but at the same time, it's not. Okay, and it's a successful tape read. Okay, we analyzed and anticipated that sell side to be taken, but you know, my current position right now, because there's one of three positions: long, short, or sidelines, and my position is preserving capital. And so we're within this macro here. So basically, the idea is you would extend this forward, and within this time window, we would see a level of buy side liquidity taken. And where's that? Right up here. Mike, I don't want to sit here and say, yeah, I trade 2022 model, because I don't know. The 2022 model is just turned into like a pattern type of thing. Like, you see a, all right, so it takes out a low, you get a market structure shift down into a fair value. It's a lot more narrative and higher time frame work that goes, pans into that. And really, what I look for is, displacement off a key level, and then once it retraces into an order block or fair value gap or a breaker, that's where I execute and take my shot. So we'll hang out here about 13 more minutes. It's kind of just a little lackadaisical here. So in a perfect world, we'd see a nice displacement, a closure on the 5 minute, and then a nice 5 minute retracement into the order block, and then we'd long there. But just not the ideal movement, in my opinion. So mark this out here. Okay, more so on NASDAQ, okay? Just because kind of consolidating here, not much of a retracement. There's going to be short-term, if it loads here for me, short-term stops resting below here for those that longing early. So for a good setup that would entice me to long or short, I need at least 10 handles, okay? Alright, so at this point, we want to see this remain open, and we're going to see it continue and get very aggressive to the buy side. Remember, we have this liquidity pool residing above here. So the probabilities for this to be traded through is higher because there's a larger pool of liquidity resting above it, okay? Okay, so back into the small order flow here. Israel, would I consider on the 5 minute 8:30 to 9:25 a breaker? Yes. Well, let's take a look. Okay, you said. Hold on, let me find my footing here. 8:30 to 9:25. Oh, I see what you're saying. So we have a high, low, higher, high. No, I wouldn't. Just because of all the wicks in here, I just would prefer not to. So a breaker I'd be looking at is the one that I outlined here. So it's blue shaded area here. This is the breakers that you want to be utilizing. Okay, so you if you really want to, you could use that as a level for yourself. But in my opinion, in terms of framing good setups, the better ones come from whenever you can really see it like this. So we have a high, low, higher high, large displacement below, beefy down close candle, trades back up into that, beautifully sells off. Okay, now we ran it back up into that one more time. Alright, so there's those sell stops triggered there. And we just traded down into that order block beautifully. Alright, so remember I said there's going to be short-term stops resting below here for those that are executing early. So sell stops taken. Yeah, of course, yeah. I use Dow for, mainly that's really all I use Dow for is SMT. Because Dow typically looks like this. Okay. Alright, so this right here is what I wanted to see. So we swept the sell stops, the short-term sell stops for those that are trying to buy early off the displacement. We're down back into this 15-minute imbalance, as well as this order block here on the 5-minute. Yeah, still not going to look at dollar. Alright, so I'm watching this small fair value gap here. I'm wondering if there's a delay on my stream here. I forgot that YouTube has that little delay that Discord does not have. So the only thing that's, so like, I'm just going to show you guys. These wicks left behind here, if these were covered in more and we had little bodies laid over, I would absolutely be longing here 2 contracts. But because of the overall sentiment that I gave you guys, the narrative, and then these wicks left behind. I need to at least see 25% of those worked in. Okay, so this just goes back to utilizing wicks to your advantage and it shielding you from taking low quality setups. Okay, and for those that are in my Discord, I promise I have a very, very extensive series solely dedicated to wicks in that mentorship tab. Okay, and I promise you're like thinking, oh, Wix, whatever. All right, I promise you, there's a lot more power in it than you think. Okay, and you will understand that power if you watch the videos and take notes. Okay, so if you're just watching them and kind of just half-assing it, I mean, it's pretty much just a waste of your time. All right, so just like I said. Okay, so we're finding midpoint here, and then we're going to go ahead and take midpoint. Like, I wish there was an easier way to do this, but this is how I do it, okay? Here's 25% of the 15-minute wick, aka gap, worked in. Okay, and then NASDAQ just swept below the bodies there, so this would be our rejection block on the 15-minute time frame. Okay, also note the hourly wick as well, okay? Right here. And then also you want to measure out, this here's our 5-minute order block. Not quite to the mean threshold, but above it, so that's actually good for now. So everyone watching my stream, how did I know? I know some of you are watching. You're like, man, those setups look so good. How did I know not to take them, no matter how good they looked? The narrative, and that's it. Okay, narrative, and utilizing the wicks, and time of day. Those 3 factors, you couple that together, you will. I promise you, you will save yourself from a lot of losing trades, unnecessary losing trades, right? I mean, most of the time you're losing money, it's from you. Okay, you take a loss, whatever, fine. And by the way, before I continue on with that, remember this, I mentioned this as a breakaway gap. The fact that this was traded to shows me weakness. I would no longer be interested in buying this market. Okay, so the fact that we traded down into this breakaway gap is a clear indication of bearishness, right? So in a bullish nature of price, we would have came down, ran the short-term stops here, immediately displaced through this opposing gap here, and then went from there. Did that happen? No. It traded to the breakaway gap. What happens when we trade to breakaway gaps? You're wrong, okay? Simple as that. So, with that being said, okay, we had the bombs dropping, large overnight move in Asia, large overnight move in London. We successfully tape read this New York session here, and it was a good one. And price did exactly what I said. I was telling it what to do, and yeah, I'm happy with what I did here. Lots of gems dropping here. I honestly did not expect to do that, but yeah, I hope you guys enjoyed this one. Since I did not execute a trade in this live stream here, I told you guys on Twitter this would be my final appearance here, streaming publicly, but because I wasn't able to put on a live trade for you guys, I will do one more public stream next week, okay? So I look forward to seeing you all then, and I do appreciate all of you for tuning in, and yeah, I'll be seeing you.